Welcome to Direct Approach, a bi-weekly podcast hosted by Wayne Moorhead, filled with timely insights, fresh perspectives, and actionable takeaways from your direct selling executive peers to help fuel the growth and evolution of your business. In this episode, Wayne sits down with Daniel Chavez, founder and CEO of VIVRI, to explore his journey from finance and real estate to building a direct selling powerhouse. They discuss the strategies behind starting small, fostering trust, empowering distributors, and creating sustainable growth. But before we begin, we'd like to thank this episode's sponsor, Exego. Today, running a direct selling company can feel overwhelming, like juggling 1,000 things at once. What if there was a tool that could scale to handle the heavy lifting and help reduce operational costs at the same time? Exego is that tool. The Exego platform is a suite of software that automates and speeds up commissions, streamlines operations, improves reporting, and offers the flexibility companies crave. With Exego, clunky, rigid, in-house software becomes a modern and efficient platform, allowing businesses to focus on what matters most: growth and making world-changing products. Join the hundreds of other MLM companies who trust Exego to improve their tech stack and boost their bottom line. Visit exego.com to learn more. Now let's welcome your host, Wayne Moorhead, and his guest, Daniel Chavez.
Hello and welcome to another episode of DSN's Direct Approach podcast. I'm your host, Wayne Moorhead, and today's guest is an inspiring direct selling leader whose background includes the biggest and most respected names in education, finance, and management consulting. He founded and leads a company that has generated hundreds of millions in sales over the past 10 years. I'm excited to welcome Daniel Chavez, founder and CEO of VIVRI. Daniel, thank you so much for being here.
Oh, thank you, Wayne. It's my great pleasure to be here. Thank you so much for the invitation.
Daniel, normally I start out by asking guests to tell us a little bit about the path that led them into direct selling. But I want to spend a little more time here with you and VIVRI because I think it's such an interesting and important part of the story. As I mentioned kind of in your intro, you have an incredibly impressive background with your time at Goldman Sachs, at McKinsey, some of the biggest names in business and in finance. What were some of the key aspects of direct selling that led you to select it as your go-to-market? Because I know at those companies, being an analyst at both of those, you had the opportunity to look at a lot of business models. You were able to look under the hood of a lot of companies. What was it about direct selling that made someone from, a traditional management consulting background come into direct selling?
Yeah, so it's a great question, and I, as you heard before, I was not ever part of any other direct selling company, not even as a customer, let alone a distributor or executive. So I was not familiar with the industry. And after working for Goldman Sachs and McKinsey, I started a construction business. So I became a real estate developer, and I got caught up in the 2004 to 2008, 2009 bubble. And when the bubble burst, and I had done really well during the bubble, but then the business disappeared, I started to look for a new business. And I spent almost 2 years using my background from banking consulting, analyzing different businesses. And one of my biggest limitations at the time was I did not have enough capital to go and start something. And I always wanted to be my own boss. I wanted to have my own business. So I also was not crazy about a business that required me to have a lot of investors or to have a lot of debt. I like to sleep sound at night. I don't like that. So during this process, the only time I've checked my alumni email, because I also went to Stanford Business School, there was a classmate saying that they wanted to do a Latino-focused shopping mall. And so I'm Latino, and I, had been building for several years at the time. So I called him and I said, "Hey, I'll come help you with your project." And so I met with them, and before going there, I realized it's from their background. So I started to research a little bit about the industry. After that first meeting, they hired me to do a 2-week consulting for the real estate project. And during those 2 weeks, I spent every free second that I had researching the industry. And that's when I really understood this is a business that you can start with very little capital, both as a company founder and as a distributor. You need very little capital. You can scale it. You can be in control. And eventually, that's what led me to decide network marketing. The other thing is, in parallel, my father had been told that if he continued to eat the same way he was eating, he would have a life expectancy of 5 more years. And this had happened way before we started VIVRI. So this had happened like 15 years ago. My father's now 73. He's been good, but at the time he really started taking care of his nutrition and started reading books about it. And I worried about him too, so I started reading books about nutrition. So I had already learned a lot about nutrition, and when I understood that you can marry those two into a business, then I thought this is it for me. Yeah.
Oh, that's incredible. I love that there was both kind of a professional and personal catalyst for you to enter this marketplace. And
yeah,
I also find it really interesting when, traditional finance, whether it's VC or PE, when they realize that there are a lot of advantages, not just from the personal aspect of the channel, but from the business aspect as well. As you mentioned, scalability. There's not as heavy a need for financing, for raising capital in the early days to really get something going. And when they truly understand the scale potential, I always see their eyes get big and they get really excited about direct selling. And again, it's just one of the many advantages and beautiful aspects of our channel. I know as part of your discovery and analysis, you interviewed a number of CEOs in direct selling. What do you feel was some of the most important advice that you received from these direct selling corporate leaders?
So it's on both sides of the equation. I think when your heart is set on something, even if somebody tells you something discouraging, you find a way to make it encouraging. So a lot of what I heard and a lot of the input that I received initially was related to, oh no, don't start a business. It's so complicated. First go and be a distributor, for 5 years, learn, then go venture. And a few of the people were very secretive about how they were doing things. And to me, that just told me, oh, wow, this must be a really great space if they don't want more competition or if they don't want to tell me how they're doing it. And then a majority of the CEOs that I spoke to and executives that I spoke to and distributors, they were very encouraging and they were very gracious. The other CEOs, the ones that were really nice and gracious, told me a lot of stories about resilience. I think that was the most important part. And it applies to entrepreneurship in general. But they told me of their different setbacks and how they had been focused and patient and had overcome that. And that was very important because it took us almost 3 years from when we started working on VIVRI in the planning stage and a whole year and a half after we started selling, but 2.5 years total, to break even. And during that time, I kept using those stories as support. And it's okay, we'll figure out, we'll find a way, we'll keep going. And then they also had some practical knowledge too that we were able to apply along the way. Mm-hmm.
That's great. I'm curious, in a lot of different sectors and channels, competition's viewed very differently. But with events like DSU and others, it really helps to highlight the collaborative nature that exists, that spirit that exists within the channel. Were you surprised how open a lot of the CEOs were
Absolutely.
to sharing with you?
I was. So that's something I love about the United States. I'm from Mexico. I grew up in Mexico. Of course, I love my country. And we have many, many amazing traditions and aspects. But one thing that I love about the US that I did not grow up with in Mexico is this whole notion of mentorship and people being open to just helping you out. Maybe it does happen in Mexico. I did not have that experience growing up, unless it's a family member, that in Mexico, but they're not your family member. It's very hard. So in the US, I think that strong culture of mentorship and people understanding that it's very rewarding to help other people and knowing that if another company in the industry does better, it's better for everyone, was to me is very gratifying. And it's the same thing, by the way, with the distributors, because we always from day one plant the seed in their mind that it doesn't matter if they're not on your team. If they do well, that's another great testimonial for you. That's another, proof of concept, proof of the brand's viability. So, help everyone out. And yeah, that's, we would not be able to be successful without that in our industry, I don't think.
No, I agree. And I love that sense of community that exists in the field also exists in the channel at the corporate level between all these companies. And I know for me, when you were talking about mentorship, it immediately brought, some names to mind for me in direct selling, like Stuart Johnson, John Fleming, John Addison, Jeff Olson. These individuals have been, and so many others have been so gracious with their time, their insights, their advice. And I think have had a bigger impact on so many of our companies maybe than they even realize. But I know that's been an important part of my direct selling journey and direct selling career. So you mentioned some of the advantages about the channel, not needing to raise a lot of capital initially, but you did have some conversations with PE, and as you were determining what your capital raising strategy was, but ultimately decided to not go the PE route and
Well,
to
we actually did. So initially, we had private equity investors, and because I was not familiar with the space and I didn't know about it, on that second meeting with the company, with the previous owners of Herbalife, they had exited the business, they had taken the company public, they had not been involved for many years. So I actually pitched them and I said, why don't we partner up and start a new company focused on the Latino market? And so initially, for them, it was very important to be something unique. They didn't want to be a Me Too company, something in the space. So we did partner. We worked together for the first 10 months before signing the agreements. We signed the agreements. Um, and initially, the focus was going to be to start a company to fight diabetes and pre-diabetes. And so we developed our nutrition system with that goal in mind. And our distribution was going to be through doctors and medical professionals only. And so their vision, the vision of the main guy, the CEO of this private equity fund, very brilliant, smart guy, was that we're going to rent these huge tents. We're going to put up these free clinics for Latinos in the US. They're going to come and we're going to do the test to see if they're pre-diabetic. And we're going to have doctors there and other medical professionals, nutritionists. And we'll even draw their blood if they allow it, some of them. And then we'll tell them, based on your results, this is what you should take. And so we worked that way for a year developing the products. And then two things happened. One, we had two different groups of lawyers come to a sample presentation, like, kind of like an infomercial based setting. So we said, okay, people come, we're going to present to you. This is for something we're thinking of launching. And both groups of lawyers said, oh, no, you cannot do that. You cannot mention diabetes. You cannot say you will cure pre-diabetes. Even if pre-diabetes is reversible, you can't say that. So around the time we were figuring out how to pivot from that, another thing was happening. So initially, the private equity group wanted to give me 5% ownership. And that's what they were used to. If they have a young guy, they were going to train me. I was going to start as COO and then 2 years later become CEO. The main guy was going to be CEO initially. But to me, 5% was not nearly enough. I wanted to have my own company. I would rather have something, that I can control. So in my mind, I was going from 100% to 5. In their mind, they were going from, giving me 0 to giving me 5. So, and then I got some really good advice from somebody that I respect and love a lot. And he said, okay, this is what you're going to tell them for negotiation. And I did exactly what he told me, and I'll share it with you and people listening, because it worked great. He said, you go into the meeting and you say, look, I'm convinced about this business. I'm passionate about it. I'm going to do it. With or without you, I'm going to do it. I would rather have you as my partners than as my competitors. But if we don't come to an agreement, we'll just be competitors. So I said that, and then they agreed to give me 30% of the ownership. So that's how it started. But then, and that sounds great. It sounded great to me at the time. And I had $1 million to invest, which I contributed. That's all the money I contributed. And then as we started, the main guy was expensing his private plane flights, of which I was paying 30%. And so he was coming from California to Dallas, to Texas, and charging $36,000 for a round trip flight. And so I was not okay with that, with paying a third of that or 30% of that. So we started having some differences, but the main things were when we had a doctor that I wasn't crazy about, and I went to him and I said, I'm not crazy about this guy, and he said, oh, don't worry, we'll dilute him later on. And I immediately thought, oh, if he's willing to dilute somebody else, which first of all is wrong, I don't agree with. Second of all, he will do the same to me at any point in time. Um, then I had a distributor move to Dallas. We were going to start the company in Dallas, and they wanted to push the start date. And I said, no, we can't push it back. This guy's here. We already have this initial set of products. And he said, oh, no, we'll have thousands like him. He's not important. Don't worry about him. If he moved, that's his problem. So then that, to me, that was a deal breaker. Like already they're trying to dilute other people was more thinking of, oh, they're going to do it to me. That's wrong. But at the time, when he said that about the distributor, that's when I said, how will I be able to go and tell distributors that we're going to do something if somebody else can go back on that? I can't do it. So that's when we decided to part ways. And we found an amicable way to part ways. We had developed a line of pastas, healthy pastas. They decided to go and market those. I decided to stay with the essential nutrition system. And we did that. I learned a lot from them, and I'm very grateful to them. They went and they did the pasta business. They tried 3 times under 3 different brands, and they didn't work out. So I understand they lost a lot of money with that. Because again, the industry, it's tricky. It's not
Sure.
it's not a given that it's going to work. And they had a lot of capital and experience. And that's why I also mentioned, and I know you were interested in that sometimes it is a blessing to not have capital.
Yeah.
Because,
can you share more about that?
yeah. So contrasting their experience, they set out, they did a new brand, they brought in a lot of capital, they brought in a lot of people with industry experience, both executives and field leaders, which I'm totally against, poaching and bringing field leaders from other companies, completely against that. We've never done it. So they did that. And then they started with really high expectations, spending a lot of money. And when you're spending a lot of money, of course, you're going to sell. So they were selling well for, a year and a half, 2 years. And then they ran out of money because it doesn't matter how much money you have, you run out of it if you're not making money.
Mm-hmm.
And they didn't really attract people who were there for the product. They attracted people that wanted to make money. And they only were making money when they were being subsidized. And then they all left. The minute they stopped the subsidies, they all left. So when you start without money, you really have to have people use your products because the products work. They're not going to use the products just to make money. You need to start with customers and you need to develop testimonials. And then once you have a bunch of those, eventually somebody starts developing a business testimonial, and it gives you time to adjust, to learn. Because growing quickly is one of the main causes for companies in our industry to fail too. So, a lot of things can happen. You run out of money. There were times when we started going very quickly, we didn't have enough money to produce enough product to meet the demand. And so it's good and bad because you run out of product and distributors hate you and they're so upset. But at the same time, you're able to control the culture, control the learning, and you avoid some of the pitfalls of growing too quickly and then just imploding.
Yeah, there's so many great insights in what you just shared, and a couple that really just stood out to me. One, I think that says a lot about you and your leadership style, is the fact that you walked based on principles, that you changed, you pivoted when you saw things that weren't in line with your values and principles and how you wanted to operate a company. That partnerships like that are long-term. And so I think that says a lot about you, that you left to go do it your way in the right way. And at DSU, I loved the analogy that you used around your kids, and kids in general, and parents. You likened having too much money, at an early stage of a company, to giving kids too much money before they're ready, before they understand how to manage it, before they understand really the impact that can have. And I think that's an incredible analogy that I've continued to reflect on since I saw you speak there. You mentioned that it took about, a year and a half, or maybe even up to 3 years at a year and a half, I think you were doing about 7,000 a month. And I guess another year and a half later to break even. What drove you to keep pushing forward when maybe the, initial performance indicators that you wanted to see weren't there? How did you keep going knowing that ultimately this was going to work out?
Yeah, thank you, Wayne. So I'll comment quickly on the kids, and then I'll answer your question.
Please.
So in Mexico, we have a phrase that I love, or maybe in other countries too, I don't know, but it's to your children, you should give them, it's very little money, some advice, and a lot of example. And I think that really is the best way. And I think also this applies to network marketing. So to your new, if you're a distributor, associate, whatever the different companies call it, you need to give them a little bit of money because they need to make money initially. When they join, some guidance, but a lot of example. That's the main part that you need. So back to your question, when we started, so the first year was just planning the business before we started selling. When we started selling, it was a year and a half till we broke even. So initially, we had developed 2 years worth of inventory. I say 2 years, not based on speed of sales, but based on shelf life. So we produced, initial products in the initial set of flavors, and we had a bunch of products with a 2-year shelf life. So we started selling, and after a year and a half, we had sold very little, almost nothing of it. We were selling, we got up to like $7,500 a month, losing $2,000, $3,000, $4,000 every month. I had very little savings. I had no money for promoting, for even hiring people. It was like one person and me in corporate at the time, trying to do what we could. So what made me stay focused was the fact that our products were working with people. So people were losing weight, people were seeing great results, and they loved the product. But nobody really understood how to make money. We didn't have any testimonials. I didn't come from the industry. We have never promoted telling people, oh, you'll become a millionaire and all these things. We've never done that. So that's what made me stay, the fact that the product was so good. The other thing is we still had 2 years of shelf life. I had all this product. I didn't want to waste it. That was a more practical reason. I have this product. I need to sell it. And people, after the first 6 months, they started telling me, just go and sell it in stores. They did not want to go into a store because the store can then, if it works out, they can just, copy you, but lower quality, lower price, or they can kick you out. So again, I did not want to lose that control. I wanted to control the distribution channel. But I really believed in the product. That's what kept me going. And also, I had initially a couple of distributors early on that had gotten amazing results. That really wanted to continue the product. And my first thought when the private equity separation came about, my immediate thought, because at the time I had been consuming the product for about 10 months from the initial test, was, oh no, how am I going to consume the product when I thought we were just going to shut down before we were able to negotiate for me to keep it and keep going. And that's a gut feeling. So that's not something that was conscious, but I realized if that was my reaction, if my main worry after spending a year working on this is how am I going to consume the product, then, we have something special with the product. So those things kept me going. Mm-hmm.
Yeah, absolutely. That is so important. That belief in what you're doing, seeing the impact that it's having not only on yourself and others. I'm curious, what were some of the key strategies or initiatives that really helped move the company from the startup phase and into the growth phase?
Okay. So one of the advantages and disadvantages of not having prior experience is that we decided to test everything ourselves and figure things out ourselves. So one of the interesting things I found, which were counterintuitive, is that I initially thought, at the time other companies were charging like $1,000 for enrollments, $500 for enrollments. This was over 10 years ago. Now I think, things have changed. But my initial idea was, let's make enrollments free. And this is one example, but it's an important example, and we did this in every facet of the business. So in this category, we said, let's start charging zero for enrollment. We would convince during the week people to come to our presentation. I forget what day of the week it was, but we had one every week. So they would come, and we would pitch them, look, we have this nutrition system. It's a business opportunity. This is how you're going to make money, and it's free to enroll. And then they would sit and look at me confused. And most of them wouldn't even enroll. And then the few that would enroll, they would enroll. And then I would say, okay, well, now you get to buy a product at the distributor price and you can sell it. They would either buy zero or they would buy like one of the least expensive product. It just didn't work. And then more importantly, I couldn't get anybody to enroll anybody else if they weren't making any money, because it takes time to enroll people. So then we said, okay, let's charge let's charge at least $20 to enroll. That didn't work either, because it would take us time to enroll them and create the profile. Then we went to $200. The distributors were making like $40 off of that. Back when you could pay for enrollments, later it changed. And that didn't work either. So eventually we came out with, we had like a $600 and a $900 enrollment, and then distributors were making more money. And that started working really well. But what I understood is that in order for the new person to pay the $600 or the $900, and they would get $900 of product, if they paid that, it was like a first purchase kind of thing. They really need to see the value in the business. And also, if they give it away for free, they don't see the value in the business. So it's something that unfortunately, I think people that are not in the industry, they think, oh no, it's wrong and you shouldn't charge for enrollment. And we can't charge for enrollment in the US anymore, and we can't pay commissions for enrollment in the US. We can in other countries, but it's unfortunate because, the way we did it, people would understand it. The enrollment was free essentially because they would get, if they paid $600, they would get $600 worth of product, which they could sell and make a profit, or they could consume it, worst case scenario, and they got it at the distributor price. So it wasn't a bad thing. But regulators, don't like that, and I don't think they understand exactly the way we do it. But like that, we were tweaking and changing everything on the business side, and the opposite on the product side. We've been very consistent with our philosophy, our products, our formulas. We have improved over time, some little tweaks here and there, but for the most part, we've stayed consistent. But on the business side, we established this culture of trial and error and changing things and trying different things. And where distributors are used to that, and they're pretty flexible, which is really nice.
Yeah, it is amazing how from the very beginning you've communicated and conditioned the field that change is going to happen, that change is a good thing, it's inevitable. Where in other companies that has the potential, if they haven't made many changes over the years, those changes can be very disruptive. But I also heard Heather Chastain mention something similar, the need to make constant, even little tweaks, but changes and updates to things, and especially the compensation plan, which I want to jump into in a minute.
Yeah.
But before that, I think another really interesting aspect about VIVRI is not only did the corporate team, you and your corporate team, not have direct selling experience, but that was true for the field as well, and the field leaders. So I'm curious how you approached training and development of people that really didn't have, an initial understanding of the dynamics in direct selling.
Yeah. So in my, early days as an entrepreneur in real estate, I don't remember where I heard this, but I either read this or heard this from somewhere, TED Talk, something, I don't remember. But it said, tell people the why, kind of like the Simon Sinek why thing, but it wasn't Simon Sinek, somebody else. Tell people the why, and tell them, what they should accomplish, but don't tell them how. Because then you'll find people who will be smart enough to figure things out. And the how will always be changing. So again, this is very counterintuitive. There are big trade-offs. So we have never had a very formal, structured training plan as a company. We never have. It's probably our biggest area of opportunity. But also, what it allowed us to do is to say, hey, look, this is important. we're going to improve people's lives. We're going to protect your health, protect the health of your loved ones, health of your community. It's very important to have this option. We will empower people to work from home, generate an income from home, et cetera, et cetera. And what you have to do is you have to do, like, for this rank, da 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 da, for this rank, for this bonus. So we tell them what to do, but we don't really tell them how. So we have monthly bonuses. We offer a lot of promotions, like do a weight loss challenge, invite people to a weight loss challenge. So we facilitate it that way. Sometimes we'll say, enroll 2 people this month, and then they will participate in this accelerated bonus, and then you'll get X percentage of their sales, things like that. But we really don't have a formal training program. And again, that's been good and it's been bad, because a lot of people get lost. A lot of people don't figure it out on their own. So we're always thinking about that. But for the most part, that's how we've done it.
Are you ready to revolutionize the way your direct selling company accesses industry insights? Introducing the DSN Library Smart Search, an AI-powered tool that puts over 2,000 curated assets at your fingertips. From compensation trends to emerging markets, answers are just a click away. If you're already a DSN supporter, then you have access to Smart Search right now. If not, it's time to check out our updated program for 2025. Starting at just $1,000 per month, your entire company can get access to the channel's most comprehensive collection of education and insights available. Visit directSellingNews.com/supporter to see a demo of Smart Search in action and to learn how your company can become a supporter now. We also invite you to join us for our first ever DSU LATAM event, January 8th and 9th. Plus, registration is open for the Spring DSU event and Global Celebration, happening March 25th through the 27th at the Irving Convention Center in Irving, Texas. Visit dsnevents.com today for details.
For the companies that are, and the individuals listening that might not be familiar with VIVRI's product line, do you mind talking a little bit about the product strategy,
sure.
pricing strategy that you have?
Really quickly. So this is VIVRI. VIVRI comes from the Latin root vivere, which is like to live. So, or vivir, vivir in Mexico it's vivir, in France it's vivre. And then we put the heart because it's really like, love life, love living. That's our philosophy. And everything we do strengthens your heart, both, nutritionally and emotionally. So we started with an essential nutrition system. The essential nutrients are the ones your body doesn't produce, so you need to consume them. And our main system has 3 products. One is a meal replacement shake, which is a complete meal replacement. The other is an energy drink, and the other is a digestive product. So together, the 3 of them give you the nutrients that you need in low calorie, the energy that you need, because if you decrease your calorie intake to lose weight, you need more energy. And then the digestive one has fiber, and it helps you go to the bathroom. Now, one thing that we did, and we've always done, is that everything we do is based on clinically proven methods. And then we've also done we buy a lot of clinically proven ingredients of clinically proven benefits. We use a clinically proven method. So, the meal replacement method is more effective than dieting alone. It's been proved many times in many studies. And then we have the results of our own study. And it's basic common sense. If you're giving your body the nutrients that it needs with less calories that you are burning, of course, you will lose weight. It's very easy. It takes away your hunger. It tastes delicious. And that's basically the essence of our product. Now, pricing strategy. So when we started the private equity group, they were saying like, well, Herbalife shake has 9 grams of protein, and OmniLife, which is a really big company in Mexico, has 5 grams of protein. And OmniLife, the founder had been the top distributor for Herbalife in Mexico. And then Herbalife was kicked out of Mexico for 2 years for regulatory issues. And Mexico is very strict in different ways than the US. So when they got kicked out, this guy founded OmniLife, partnering with other US Herbalife people, and for 2 years had no competition. And they grew quite big, and then Herbalife came back. But anyway, they were saying, if that's the market in Mexico, if we do 10 grams of protein, we'll be better than both, and we'll be great. But I would go to the scientists and would say, what is the ideal? I don't want to go just better than the competition. And so then I understood in the US for a meal replacement, you need 16 grams of protein, but in Europe, you need 21. And you need a certain calories. And of the calories, a certain percentage has to come from protein, a certain from carbs, a certain from fat. So it's a more complex than it seems. And I convinced them to develop that. I said, we have to do this. We can't just have that. It's something I want to consume every day. I want my parents to consume it, my kids to consume it. So we did a really high-end product, much higher end than what was around. And our price points are much higher than what was around. What we've been able to accomplish is that most of our distributors are college educated, especially outside of the US. In the US, you don't need a college education to make good money. The economy is big enough. In Mexico, to afford our products, you pretty much have to be a professional. So we have a lot of doctors, lawyers, nutritionists, small business owners, architects, whatever profession. But that's the bulk of our distributors, and in Latin America too. So we were able to go into a higher price point at a time in Latin America when even being a professional, you want an extra income, or you're a professional who's now staying at home with the kids, and maybe your spouse works, but you don't because you're home with the kids, and you're very smart and you went to school and you have all these abilities that you're not putting to use, and so then VIVRI comes in. And we found, I always have the analogy that in Mexico, people like, let's say here, if you compare 7-Eleven with Starbucks, and some people prefer to have a Starbucks cup than a 7-Eleven cup in their hand because they think they look cooler. That's how we felt. I mean, people that would have never been with a cup of another direct selling company in Mexico, they were very happy with their VIVRI cup because we came out of the higher market.
Yeah, I think that's an important part of the strategy, how you positioned it, up market from everything else, and how you approached it, not just from how are we incrementally better than the competition, but how do we make the best product that's going to have the best impact and provide the best benefits to the consumer. I think that, again, also speaks a lot to your leadership style and strategic approach. And speaking of strategic approaches, you've been very measured with your international expansion. I think you're now in about 7 markets, where a lot of companies try to open up as many markets as they can and get as much growth as possible. You've been about every 2 to 3 years, strategically, thoughtfully launching markets. Can you share a little bit more on your international expansion philosophy?
We're not in a rush to grow. Our vision is always long term. So everything we're doing is designed to last forever. So we at the company have 0 debt. We don't owe 1 cent of debt. We're not leveraged. There is a time it takes. Every time you open a country, you need some time to break even, just like we did in the US. And you need to have high fixed costs. And you also need to be willing to spend your time to go there and fly there and do that. So while we still have a lot of growth in our existing markets, it makes more sense for us to grow in our existing markets than to go open a new one. It's more profitable, it's easier, it's better for our quality of life. So it has to do with that. The other thing that happened is COVID came along. So when COVID came along, we halted a lot of those plans for a while. I think we want to start next year reopening countries. So we're working on that. Maybe for summer of next year, we'll open another country. We don't say which one, but another country in South America. But yeah, that's been the reason. We're not in a rush, and we still have so much growth left in our existing markets.
I love that. Yeah, just making sure that we're maximizing the results from where we're at, and not always kind of looking over the fence at potential opportunities, but make sure we're maximizing and optimizing the ones that are really right in front of us there. I'm curious, there's always discussion around what it means to launch a market, whether it's just being able to turn on a website and accept product and ship product and pay a check. What do you feel is the right level of support that a market needs, even initially, to really see results within that region or market?
I think you need to be willing to the best way, ideally, and I was not able to do that because I have 6 kids. But ideally, the founder would move to that country for about 6 months. That would be the ideal. If not the founder, some top executives, top field leaders, at least for 6 months, preferably for a year. I think it has to do more with the time, because the initial people that you need to become great in those countries to then sustain all of the network in those countries will take a lot of time to learn. So unless they already exist in your organization and they're willing to move back to their home country, that would be another route. We never had that happen. Then you would be willing to spend a lot of time. So the capital commitment, you can manage that. That's not that big of a deal, to be honest. It's more the time commitment, because you need to be willing to spend a lot of time.
And I know you've also spoken about the importance of whether it's a country manager, a regional head, to make sure that they are from the region. Can you talk a little bit more about the importance of that and the impact that you've seen at your company?
When we started and I looked at what the companies were doing in Mexico, all their videos were made in the US with Americans, and literally, at the time, it probably changed now, but almost every single video had, like a white lady, an Asian guy, and like an African American lady, or some combination, right? And which is great for the US and it's very inclusive and that's great. But in Mexico, we don't have that diversity. We don't have those different ethnic groups. And you could see in the videos that they were just dubbed. So they would have these videos with dubbed voices in Spanish, and the culture was not hitting the emotional, levers that it could be hitting. So we decided, we're not going to do things in English and then translate them into Mexico for Spanish. So we need to have people from Mexico coming up with the strategies, the ideas, the campaigns. So that's what we try to do in every country, have local people come up and tell you and then adapt it. Because otherwise it's really easy to treat everyone the same, but then eventually a lot gets lost in the translation.
Absolutely. I think that's a really powerful lesson.
Yeah.
And continuing on that, you've had a lot of success in Latin American markets. It's a segment in direct selling that's growing so rapidly. What are some of the key considerations that companies need to be aware of as they expand into Latin America?
So Latinos, we like to do everything together as groups, as teams, as families. I think the Anglo culture is more individual. And again, there are trade-offs. I'm not saying one is better than the other. But I think in the Anglo culture, one example I like to give is they'll give you like, here, do a 90-day challenge, individually. Here's your product for 90 days. Go do it. What we do is the opposite. We do, a 10-day challenge, which is always done in a group format. So come join a team. We're going to do this 10-day challenge. We're going to be in communication during the 10 days. We're, going to Zoom together, do things together. So that's what we do. Another easy example is the Nike commercial for the US can show one person running alone, and people will connect with that. In Latin America, they need to show at least two people running together, and then people will connect to that. So we're just the way we grow up. Houses are smaller. You have more people per house. The families don't move cities as they do in the US. It's very rare for anybody to move to another city in Mexico. So people live their whole life in the same city. All of their extended relatives live around them. They're used to getting together with 30, 40 relatives constantly. So everything is we're just used to that group mentality. So it's important for companies to just test it and talk to people and have local people give you feedback.
What about age demographic? It seems to be a little bit younger. Can you share a little more on that and how you connect with that age group and demographic?
Yeah, so it's the demographic is about 10 years younger in Latin America than in the US on average, the average population age. We are now just going to celebrate our 10th official year in VIVRI in 2025. And I told distributors last night in a Zoom that I want to go back on the field, which I haven't done since the first year. I want to go back be a distributor again, because I want to look for people 10 years younger than me and establish that next generation of leadership. So I don't have the how to get to them now. I mean, obviously it's going to be more through social media and TikTok, Instagram, and this kind of things. But I don't have the answers yet. But I will in about a year, because I'm going to work on that. And I think that's something that we all have to do in the industry. And like we were saying before, just like another country, you need to have those young people. So we have in VIVRI the children of some of the distributors who are now reaching that age, that they are 18 to 25. So one of the things we're going to do is start working with them and just testing promotions, testing programs, testing concepts with them. Mm-hmm.
With that testing approach that you mentioned, I want to swing back to the comp plan and the importance to the company of making continual changes and how you roll these out also in a very measured and strategic manner.
Yeah, so we had initially, we always did small changes and people were used to it. We had at some point a devaluation when the peso went from 13 pesos for $1 to 21 in a few months. I don't remember exactly, but seems to me it was like 2-3 months. And we can't double prices, right? I mean, we make the product in the US, we sell it in all the other countries. We were selling it at the time, just Mexico and the US. But we couldn't raise prices that much. And what I realized is if we didn't change the compensation plan, then we would go out of business. So the way we were paying for enrollments in Mexico was not sustainable given the new exchange rate. So we made an adjustment that was very disruptive. A lot of people complained. Some people got, tuned out of the business for good forever. We never really, they stayed, but then they weren't in it anymore. We kind of, trust was broken, so to speak. So after that experience, I realized, okay, even if I've told them, we're always going to change the plan, we're not going to change the payout ratio. Payout stays the same. The percentage that we pay out stays the same, but how we distribute it changes all the time. Even at that, they still won't accept it if it's a big change. Since that time, we always come out with a promotion. And so we'll say, look, this is a promotion for this month. We're going to do this and you're going to get paid this different way. And that's a promotion. And then, or, we'll say for 3 months, and then we continue to extend it for several months before we make it permanent. Usually a year, we'll leave things. Other times, because this happens, mistakes get made. So we made one mistake. We hired, different companies to calculate the compensation for distributors, the compensation plan software, right? So we had to migrate 4 times, and then we built our own. We had to migrate because as we were growing, the companies couldn't service us. And we started, you start with a small company that's really cheap. And that's what we could afford, so we went with them. Then we realized this company is terrible in service. Let's move to another one. And the next one, they were congratulating us, a few months prior that we were their biggest client. But then a few months later, they just couldn't, it wasn't working, right? Like the distributors couldn't log in, it was breaking down. So we had to change to a more expensive one. Eventually, we built our own. But in one of those transitions, in the third transition, they made a mistake. So our compensation plan takes into account 9 levels. It's uni-level, 9 levels for rank. When they programmed it as taking into consideration 15 levels for rank instead of 9. I don't know how that happened. This is a third-party company. We realized this happened like 2 or 3 months into it. The distributors had already increased rank. They were so happy that they increased rank. We figured out why. And then we said, okay, we're going to leave it for a year. And eventually we just couldn't take it back. So we made it a permanent change. So, that made it easier for them. So again, it's sometimes by accident. Sometimes it's listening to a distributor and we'll test some idea that they have. And with distributors, it's very clear. Some always have ideas so that they can make more money, or they have ideas to restructure something for their benefit, and others have ideas for the benefit of everyone. So that's the main distinction. you never want to test anything that's not going to benefit everyone.
But yeah, you've done an incredible job of keeping change and constant change as part of the culture there, so that it doesn't send shockwaves, so that it's not as potentially disruptive as it could be. I also know IP has been really important aspect of the company. Can you share your approach to protecting IP?
Yeah, so I just know now that the way the world is changing, and we went from like seeking globalization to now every country trying to be more independent and more sovereign. That what I've being told a lot in the past year is that intellectual property is not being respected, and foreign patents are not being respected in a lot of countries around the world. And even if they were to be respected, the legal systems in a lot of countries around the world, are not going to really solve it for the company that owned the technology. So it becomes more about building your brand, knowing that somebody can copy what you're doing. You're building the trust with your distributors, and finding ways to have a local company that the local company registers the IP, and the local company will have a much better chance of defending that IP than a U.S. parent company. You also diversify. So what we did is that VIVRI is a separate entity in each country with its own separate legal, ownership, legal everything, bank accounts, everything is separate. It's not like us; they're not subsidiaries. So Herbalife went through a big fight with the SEC. Ultimately, they had to submit to a lot of changes in the US, which is 20% of their business. 80% of their business is outside the US. And so that saved them in a way, but it's still one company, as I understand, in all the countries. If the damage, if they had managed to shut it down in the US, they may have had to shut it down everywhere in the world. But if they had been separately owned entities, then that would not have been a risk. So as an entrepreneur and as a business owner, people think, oh, it's all about risk taking. And to me, it's always been the reverse. It's about minimizing risk in everything you do. That's my number one job is to minimize risk. So how that those are some ways you minimize risk.
Yeah, that's really important. That's a really interesting strategy.
Mhm.
So I'm curious, there's a lot of companies and individuals and executives at different direct selling companies at different stages in their life cycle. Many of those that tune into direct approach and that attend DSU are in the early stages. And I love that we're continuing to see great companies launch and grow within the direct selling channel. For those companies that are in the early stages, what advice would you have for them?
Starting a company right now, the first one is that you really have to make that commitment to the business. And you really have to understand that there are going to be a lot of obstacles, difficulties, but you have to make a very, very, very strong commitment to stay there. In the beginning, I think you have to have that balance of a sense of urgency with a lot of patience, because things take time. But the problem is that what I often have seen is that people start companies and they have this sense of urgency and they're trying to do quickly and they expect the results to come quickly. And that doesn't work. And there are other people who take the patient approach and it's going to take a long time, and that doesn't work. So what does that mean? You have to every day be acting with a sense of urgency. Whatever you have to do it quickly, almost like fire ready aim, or whatever that expression is. You have to do it. You have to do it quickly. Make decisions quickly. Do everything quickly, and almost forget about the timeline and forget about how long it's going to take, because it is going to take a long time for you to be successful. And you have to align yourself with people who believe in what you're doing for the long term, who are willing to forego a paycheck in the short term if it doesn't materialize, or who are able to take a pay cut initially, knowing that later on they can make better money. But you have to surround yourself with that kind of people. You have to, like, practically, if you're a startup, and I don't know if this is politically correct or not, I hope it is. This is just my opinion. But if you're a startup, don't hire the the man or the woman who has a family with little kids, who depends on a steady paycheck, to support their family, because you honestly don't know if you're going to be able to have money for payroll. So, find people that can survive on peanut butter and jelly sandwiches. If you're really like bootstrapping and starting, you know, find people like that can live with very little money, that can literally shower at the Planet Fitness if they have to, and sleep in the warehouse or sleep in the office, because then you're guaranteed that no matter what, yeah, they will be there, and you'll find a way to make it work. Um, if you have fixed expenses, even if they're low, you can go out of business. So don't have any fixed expenses when you're starting out. Find a way to do it without, just variable expenses. But don't have fixed expenses. Don't go into debt. If you can do it without partners, do it without partners. You can get the advice. The main thing from partners is that you will learn. They will present you with manufacturing facilities, scientists, things, but you can find out without partnering.
Yeah, thank you for sharing that. What do you feel were some of the most pivotal decisions that you've made along the way?
The first one was that with a product. So we did not design the least expensive product, but we were bold enough to go after the best product for what the body needed, for what the person needed. The bigger market is in the inexpensive products in Latin America. So if somebody really cares about, making like a massive amount of money, they should do that. That's the big market. That's the majority of people. We go after that top 10% in terms of income in Latin America. But for us, that we did that. It's a differentiating factor. So if we had gone for that mass market, I don't know if it would have worked out. But that was a very pivotal decision that we did. That was going against what the private equity guys wanted and other people wanted. But that was just a decision we made. And I'm personally glad we made it, because then we have the product that I can consume every day and my family can consume every day. So that was one. The other one that I think was good, especially looking back, is we formed a medical and scientific advisory committee, but we do not disclose the names of the members. And we work with brilliant scientists, but we've never disclosed their names. And the reason was that I saw two strategies. When the computer started, you had like Dell, Hewlett Packard, and Acer, and all these computers, and they were all advertising Intel, Intel chip inside, and this brand of speakers, or they were almost like when you were buying a car years ago, from like some of these entry companies, they would tell you like, oh, we have our engine is made by this company and the speakers and the sound. And I like what Apple did better. Apple is just Apple. Even when they were buying from Intel, they weren't advertising Intel. So early on, we said the brand is going to be VIVRI. It's not going to be a celebrity association. It's not going to be, a scientist, because that scientist could go crazy and, do something that we don't like, or can leave the company or so. So the star of the show is going to be VIVRI. So that was also something important we did. We've always done it that way. And then we went through a thing where we were giving a lot of recognition publicly, always to the distributors. It works for some of them. For other ones, it goes to their head. And we come back to the better strategy for everyone is to promote VIVRI. And I'll give you one example. So one distributor came to me one day and he said, oh, this guy lost so much weight. He's so happy with our products. And when he thanked me personally, I said, no. You did it because your effort. And then I'm like, no, like, please don't do that. He's like, what do you mean? I said, well, I know you're trying to be humble and telling him not to thank you, and that's good so far. But when you tell him like it's all thanks to him, and he will think, oh, I didn't need VIVRI. I just did it on my own. And the truth is, he hadn't done it on his own in 50 years, right? He did need VIVRI. And you have to tell him that, and don't say, oh, it's because of, Daniel, he started the company. No. Like I always tell them, don't say it's about me. Say it's about VIVRI, it's about our system, it's about our model, because then he can say, oh, I did it with this system. I can share this with other people. They can do it. So that's another very important thing. The star has to be the brand, not the individual. I don't, we don't like that. And that's part of the reason why we always keep a low profile. We don't really do a lot of interviews um, or things like that. I mean, I can't remember the last time I did an interview. It's been a very long time. But I love you guys and I wanted to do it. So yeah, so that was another one. Let's see. Incorporate finding, again, attracting the right talent to your corporate team is very important. Um, what else is good? Never taking on debt. If we are taking on debt, because there are ups and downs in the business and there are devaluations and, costs go up and things happen. So for us, it's all about keeping fixed costs low and the variable costs, you can control. Those are our biggest expenses, commissions and product, but they're variable. So that's been good too. The biggest mistakes have been when some of the top field leaders begin to have the wrong kinds of attitude. We've taken too long to invite them out of the business. And we always try to mend the relationship. You always try that's a given. So we always tried, but there are some where you could just see it not working. And then we always took like a year and a half where we just let them continue to be negative and not do the right thing and continue to like subsidize them in many ways. So I would say now that I would act more swiftly when you don't have the right people in any part of the company. You have to find a way for them to not be interacting in the events. I mean, maybe they stay with their paycheck. That's fine. If they're not, breaking the code of ethics, we're not going to kick them out, right? But then you don't involve them in the events. You don't bring them in as speakers. You don't, because we kept people involved longer than we should in that sense, and that it ended up costing us in the long run.
Those are incredible insights. Thank you so much for sharing those learnings and the advice. As you look at direct selling over the next 3 to 5 years, we obviously know the landscape is changing very rapidly. What excites you most about the next 3 to 5 years within the direct selling channel?
To me, it's the same thing. I mean, the only thing that really excites me beyond, a normal job, a normal business, all of that, because it's always nice to go to work with people that you love, that you like, that you get along. It's always nice to be able to provide for your family. So beyond those things, when we see the impact in the people's lives, both in the physical health and in their financial well-being, and it's such a cliche and all of this, but once you live it, like really that's the motivation. So for me to continue to see in the next 3 to 5 years more people participate, more people do well, more people, I mean, we had people that would never want to get up and talk in stage in front of 10 people in their entire first year. They just would not get up, and I could not convince them to go up and present something simple. And 5 years later, we see them present in front of like 2,000 people or whatever, and the way they do it, and that's just amazing to see the personal satisfaction of them being able to know that they have a way of connecting with people, that they have a way of motivating people, that they have a way of communicating that they didn't think was possible, has been fantastic. And the other thing that has happened, because 10 years is a long time, we usually people start VIVRI as a side business, as an extra income, because they have a main job, they're professionals, whatever. But we've seen it many times that people have lost their jobs, or they've moved to another country where they can't, they were a doctor, but they don't have the license to be a doctor in the other country. They moved because their spouse had to move. And then, because they had VIVRI, and maybe they had VIVRI as a little side thing, but they have it, then they can focus on VIVRI. And they're so happy and so grateful because, they were not left without anything. And I've seen that happen many, 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 many times. And so these are people that are able to replace their traditional income when they unexpectedly lose it. And the difference for them, for their relationship, for their kids, is pretty amazing. Because when people don't have that, because I've seen those stories too, it's terrible. It's terrible. So to me, that's always the motivation, to have our people do well.
I love that. That's what's continuing to drive you. That's what this channel is all about. Daniel, thank you so much for your time today. You've been very generous. And we do know you don't give a lot of interviews. And so we were very excited when you agreed to come on, and you shared such incredible insights. So thank you for all you're doing for VIVRI and everybody there, for the direct selling channel as a whole, and congratulations on 10 incredible years.
No, thank you so much, Wayne. Thank you so much.
Thank you for tuning in. Please take a moment to subscribe and give a 5-star rating and review to help Direct Approach continue to provide more candid insights and interviews for direct selling corporate executives. And don't forget to register for our upcoming spring events at dsnevents.com. Secure your spot now. Thank you for listening and supporting DSN and the Direct Approach podcast.